Welcome, everybody. Steven Sitkowski here. Welcome to this week's edition of Market Insights. We're going to take a look at what's going on in the financial markets. I want you to know this presentation is for educational purposes only. It is not intended as investment advice. So what do we take a look at? Fundamental influences, overall market trends, sectors, and then we take a look at individual stocks. So let's move in the markets. Well, the Fed's likely to hold interest rates next week. Next announcement is September the 20th. So anything other than them holding, I think, would have a detrimental effect on this market. So mark your calendar. You're going to want to know what the Fed did on September the 20th. It'll be all over the financial news, I can promise you. That announcement comes out at 2 o'clock Eastern. Tesla got an upgrade today from Morgan Stanley with a new price target of $400 a share. A little aggressive. And the reason for that is due to artificial intelligence. Everything is artificial intelligence these days, but it's the AI system that they will be utilizing for their robo fleet of taxis. Be interesting to see how that goes. You know, a year from now, literally, you could be driving down the road, turn, look at the vehicle next to you. There's nobody in the front seat, just somebody in the back seat. Sounds a little futuristic. It's getting close. Meta's developing a new AI system. Their stock got a little boost as a result of it. The 10-year treasury sits at 4.29%, and oil is hanging in there in the relatively high 80s after spending time in the mid 60s just a couple of months ago. What are we watching this week? Nothing going on today or tomorrow. But then it gets busy. CPI number comes out on Wednesday, and core CPI, year-over-year CPI. So that'll be of interest to us because that's of interest to the Fed. On Thursday, initial jobless claims, as it does every week. Our last one was a bit light, came in at 216,000, expecting 220,000. Producer price index. So that's basically the CPI at the wholesale level. Retail sales are coming out. And we have got consumer sentiment on Friday. So starting Wednesday, it is a data-packed week. You're going to want to be watching that. Last week's heat map, and look who got beat up, NVIDIA and Apple. Apple, due to an announcement that the Chinese government is not going to let their state employees use iPhones. I think that's retribution for what we're doing between China and NVIDIA. And NVIDIA, I just think it's gotten very pricey, and people are starting to wonder how much further can that run. Well, it can definitely run further, and it will run further. But in the short term, little profit taking. Industrials had a big pullback, which I thought was a little surprising. Year-to-date heat map, boy, there's been a lot of money made out there. NVIDIA is still up over 200%, Tesla over 100%, Amazon 67%, Meta about 150, Google 54%, Broadcom 53, AMD about 60, Salesforce 70, Microsoft 40, Apple 36. Like I said, been a whole lot of money made this year if you're in the right trades. Market breadth last year is where we look at the number of new 52-week highs versus 52-week lows on the New York Stock Exchange. It was 2-to-1 in favor of the lows. It was even worse on the NASDAQ. So definitely been some pulling back for the last month or so. And of course, April was a down month. Percentage of stocks trading above their 50-day moving average, about 33%. We want that north of 50% to confirm a bullish market. We don't have that. Last week, basically all of the various classification for stocks were negative. The big hits was small cap. Large cap fared better. And you can see the year-to-date numbers. Large cap growth, 30%. But look at large cap value, less than 5%. Mid cap growth, about 14%. Value, 4%. Small cap growth, about 10%. The small cap is definitely lagging. Small cap value, 2.4%. So we get the September swoon that is called seasonality, but it's generally the second half of September. So we'll be keeping an eye on that. And the S&P performance for years where the index gains 15% through August, as it did this year. This goes all the way back to 1950. We can see the probability of the market finishing higher for the balance of the year, 87%. Want you to know that we could be in for some volatility. So if you look at the VIX, which is the fear index on the S&P 500, right now that's very low. But look what generally happens. It goes higher September and October. Then it starts to come back down. Crude inventories have been plummeting. That's why you're seeing oil prices go higher. Here's some good news. Net worth is on the rise. I keep hearing about what a tough economy this is. I think it's a fantastic economy. We have almost no unemployment. You got 8.8 million job openings. Wages are going up. What else do people want? Earnings are starting to go up at the corporate level. Job market remains tight. So we'll see what the number looks like for Thursday. Earnings this week, we've got Oracle, not a lot of big earnings announcements, and Adobe for the week. Year-to-date returns by sector. Communication leads group, 44.42, followed closely by tech and then discretionary. Then you get a pretty big fall off. Industrials, materials, energy. And then over on the right-hand side, these are all the defensive sectors that are either near break even or down on the year. Let's take a look at the charts. See what we got cooking. What do the charts tell us? Let's look at the S&P 500 for starters. So we are kind of just hanging on right here to that 50-day moving average. So the slope of the moving average is still up. It has flattened out some. We briefly crossed below, went above, crossed below, went above. And I think we can expect this kind of action throughout the month and maybe the first part of October. I think the last quarter this year is going to be awfully good. Lots of opportunity. On the Qs, this is the NASDAQ 100 Trust. We are slightly above the 50-day, but again, very similar kind of profile. Where it changes is when we get into the Russell 2000. This is 2000 small cap, mostly stacked in materials and industrials. And you can see, it started making some progress and then just dropped precipitously. For a day, crossed above the 50 and it gave up, and we're significantly below the 50. So small cap has definitely been underperforming. All right. Well, that's it for this week. I will see all of you next week. Until then, be blessed and bye for now.